Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, the COT data, which is essentially what hedge funds and the big players in the market are doing and how they are moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong level of previous historical resistance from a monthly standpoint, which is now turned support and demand after the market broke it to the upside, because what we know is that previous resistance, once it gets broken to the upside, becomes support. Now, this level was a quite strong zone because it got rejected to the downside multiple times. In fact, we can see here how the market tested its zone and rejected it to the downside. Again here, tested and rejected. And again here, we can see how the market tested it, rejected, and again here, tested and rejected to the downside. After, the market broke above that zone, and currently it is retesting it as support. So since the market is testing here this previous monthly resistance turn support, we could expect some bullish price action to be created away from this zone. Dropping down on the weekly time frame, what do we see? Well, from a weekly perspective, if we are to check the trend of this market, we can clearly identify how currently we are in an uptrend with the creation of higher highs and higher lows. Now, as the market is creating higher highs and higher lows, we could expect more bullish continuation to be created away from this level and for the market to essentially create a new higher low away from this zone. We can also notice that from a pattern standpoint, we have a very clear impulse followed by this correction. Now, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50% and 0.618 Fibonacci retracements lining up exactly inside of this zone that we could in fact expect this market to potentially reject to the upside. Dropping down on the daily time frame, what do we see? Well, from a daily standpoint, the situation is quite clear. We have a market which has quite strong resistance at this zone, but at the same time has strong support at this area. In fact, from here, this previous rejection to the downside was created, and at the moment, the market is still below this zone. But at the same time, the market also has support across this area, and the market is currently respecting this area as support in multiple occasions, and as the market is testing it right now, this level is still acting as support and the market is still respecting it as support. So until the market will remain in between this resistance and support, we really don't have anything interesting. Now, even if the market breaks below the level, we don't have anything interesting because the monthly and weekly timeframes both seem quite bullish. So at least for the moment, if the market remains inside of this zone or breaks below, there is nothing interesting because the monthly and weekly timeframes are not aligning with a bearish view, which is what we would have from a daily perspective if the market were to actually break below the zone. So the only way in which we get something interesting is if we get a potential break above the resistance. Now, we don't know if we will see the break above resistance, but if we get this break, what we know is that the previous resistance should become support. So after the break, on the retest of the previous resistance turn support, this is where we would have something interesting because inside of this previous resistance turn support, we have good probability of seeing more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from the level. In fact, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, and we check the data precisely for gold, we can see how in the long run net positions have been massively increased. We went from having 71.4k net positions all the way up to having 188.6k net positions, with longs getting increased from an institutional perspective from 220k all the way up to 271k, and shorts getting decreased from an institutional perspective from 148.8k all the way down to 83k. So even though we're getting in the short term a slight decrease in the net positions, in the long run the net position increase has been massive. Institutions clearly have added longs and decreased shorts. So if we get the break above this range, on the retest, there is definitely the possibility to see more institutional longing, so institutions adding more longs and closing more shorts, and at that point that would definitely increase the probabilities of a potential rejection to the upside away from this level. So if we get this break and the retest, what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames from a directional standpoint. However, when it comes to identifying early shifts in a trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect on the retest of this previous resistance turn support is that if this market would shift from an intraday bearish market during this move to the downside to an intraday bullish market, at that point I would expect a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which is linked both in description and in my bio. Here, you will have the possibility to gain access to the most complete, all-inclusive mentorship program. And in this program, you have the possibility to gain access to all my trading courses, the COT data software, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me. And if you continue to scroll down on the website past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest to go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.